Hello friends, welcome back to your channel Stock Dr. RR. Today I am going to talk about an interesting topic called as index futures. We will try to see how to trade index futures for swing trading as well as using it as a best hedging tool against your stocks holding. This will be an introductory video on index futures segment. So I will try to keep it short and sweet. So before we start, in case you like today's topic, then please motivate me by hitting a like button on this video. So let us understand what are the benefits of index futures. So the first benefit is less wild swings in the index on intraday basis. So if you see the index, right? Now we are going to talk about three index here, right? The first one is Nasdaq, second is Dow Jones, and third is S&P 500. So if you open a trading view and see these index futures, you will see that there are less wild swings on the index. Means you can say there are less doji patterns on the index on day-to-day chart. The second important point is there is no need of account size above 25K. And the third important point is you will not be marked as a day trader, right? If you do more round trip trading, right, on those futures. So, for example, in a day, if you do a buy sale for 3 to 4 times, right, and more than that, then also you will be not marked as a or flagged as a day trader. The fourth important point is it's a best instrument for hedging against your long-term stocks investment. The next benefit is that the beginner can take the position in index future with only $1,000 to $1,500, and I'm going to show you on the Think or Swing platform in next couple of minutes. The next important benefit is there is no worry of premium decay like we face in call and put options. So let's talk about all these benefits in much more detail by visiting our favorite charting tool, TradingView, as well as our trading platform, Think or Swim. So here we go. Let's start with TradingView here. So as we all know, we have three major indexes in our market. The first one is Nasdaq, the second one is S&P 500, and third one is Dow Jones, right? So if you see here, let's talk about some of the latest candles on the day time frame, right? So here you will see there are many candles. You will see those are kind of Marubozu candles, right? Now I'm saying about not wild swings in a day trade in a day time frame. That means you won't see more these kind of candles, right, on a day trade, right? Now whenever these kind of candles are there, that means there is indecision in the market, right? But most of the candles in the Nasdaq, you will see they are either a red candle or a green candle on a one way run up, either on the upside or on the downside. So now let me clear this drawing. So what I'm saying, we can use the index future as an instrument for hedging your long term stock holdings, right? So for example, let's talk for sake of an argument, okay, if you know, right, for example, if you know that suppose you are here on this day and you know that index is facing resistance here, right? These two places index has the resistance, this is the first and this is the second top, right? So now we know that index is facing resistance here, right? So when index came here second time, it could not sustain and trade above the first top it made on 14,200, right? And then it just started going down, right? So if you see here, suppose you are on here on this day, right? And you know that the index has made its top, right? And now index starts falling, right? You know where is the support lies for the index, right? But when index start its journey from this top to this bottom, your stock price will go down like, minimum 15 to 20%, right? Now you are holding those stocks for your long term goals, right? But in the short term they are going to crack about 12, 15 to 20%. And to fill that gap, right, to fill that loss, you can take a position against your stock on the index by shorting your index here, right, somewhere here, and buying it back, right, on the lower zones, right? So for that we use the index futures trading, right? In the futures you can, either buy low and sell high, or either you can sell on the top and buy at the low, right? So for the index futures we have three type of futures, right? The first is uh, ES. ES is for S&P 500 micro. So here I have MES. MES means micro E-mini S&P 500. The second I have here is micro E-mini Nasdaq, right? And the third one is micro E-mini Dow Jones, right? So now why I have mentioned about this micro, because these micro indexes need less margin to trade, right? So let me pull up think or swim here, right? So here the benefit is, if you are a beginner, right, you can start with trading on think or swim, okay, with virtual account. That is the benefit of think or swim, right? So here this is the live trading, this is paper money. I'm logging on paper money. Okay, let's see how it goes here. So I have this opened here. Let me print that on the screen. Okay, let me clear all my drawings, and you can see here. So now here you can see I have logged into simulated trading account. Okay, here you will get two accounts. The first one is margin, the second one is IRA. For margin you will get margin of $20,000. For IRA you will get margin of 100K. So I will show you my margin account. Okay, so here if you see here, I did paper trading. Okay, and here you can see uh, on 20,000 I have gained almost 19,000. So you can see that I have almost doubled the account, right? And here I can show you the trades, right? So here you will see I mostly traded on, uh, all these Nasdaq and Dow Jones, right? These two indexes I traded on. Sometimes I traded on, see, if you see this, YM means Dow Jones, right? Uh, NQM means Nasdaq, right? And all the index start with M means micro lots, right? So let me quickly show you the difference between the micro lots and mini lots, right? So here you go. Let me pull this up, right? So here we are going to talk about micro lots, right? So let's talk about micro Nasdaq. M/MNQ is for micro. And let's see, here we go here, and here you go into the uh, futures trader and analyze. I'm sorry, here futures, right? So the important point I want to show you here, suppose if you want to trade in MNQ, right, slash MNQ, that means micro lot. So you need the margin of $1,760, right? And here it says that quantity into tick 0.25 is equal to 0.50, right? So what this means that on every 0.25 movement on the index, we will get $0.50. That means suppose you bought the index on uh, 13,766, right? And then index goes uh, $10 up, right? Means from 13,766 it goes to 13,777. Then you are going to get $20 if you sell it there. Why? Because on each unit movement you are going to get $2, right? So for 10 points movement you are going to get $20. This is for the micro lot. Now if we talk about the NQ, right, the regular lot, you need the margin of $17,600, right? And on each point movement you are going to get $20. So on 10 point movement you are going to get $200, and vice versa. On if you buy at 13,767 and if it goes to 13,757, then you are going to lose $200, right? For the $10, for the 10 points movement, $200. So the likewise it is for the other index. For example, if you talk about S&P 500, let's talk about micro lot. You need the margin of $1,200, and on each point movement you are going to get either $5 or you are going to lose $5. All right. So this is all about index futures. This is, as I said, this is an introductory video. So you can, start your trading, simulated trading, right? On Think or Swim. Try to trade for, 1 or 2 months, right? Right. Analyze your trades, right? And see how much profit or loss you are making. And if you are consistently getting uh, profitable trades here, the way here, yeah, I can show you for my trades, right? And then you can think on trading with the real money, and for that you need to activate the futures from your TD Ameritrade account, and then you can start with. So I hope you guys like this video. In case you like this video, or you can feel that something informational you learned today, then please like, comment, subscribe, and share it with your friends and family so that we all can learn and earn together. All right. Thank you. Bye bye.